Hi, my name is Robert Saik. I'm the founder and CEO of VisorPRO AI and AGvisorPRO, and this is to provide information on our performa and cap table. It's always difficult to go over somebody else's spreadsheet, so I thought I would do this to help expedite your understanding of our spreadsheet and where we're at. And well, I hope I do just that. So I want to start off here on the assumption side, and this is in an Excel spreadsheet, so you should be able to play with it as you want to. Our current pricing per technician at the farm equipment dealership space is about $1,400 a year, and we're targeting multiple store dealerships and multiple techs, so 8 techs per dealership, 8 techs per store. It puts an average sale price of about $92,000 per year. Would be revenue. Now that revenue varies from $50,000 to $300,000 depending on the dealership size and the size of the contract with the dealer. But this is all recurring revenue, and we get paid twice a year at the time of sign up and 6 months later. I'll show you that. In terms of addressable market, in North America alone, in the ag tech sector alone, this is service and technical, in the agriculture space alone, there's 29,000 techs in North America at $1,400, puts at about 42 million. In terms of stores, there's 3,600 Case in New Holland, 500 Agco stores. So if we break it out by technician or break it out by stores, we're still looking at about, in North America alone, this does not include South America or Australia, you're looking at about $42 million. A 20% market share would put us at about an $8 million revenue US. Canadian included in this is $10 million then. 50% market share, because we're first market movers, should put us at about a $20 to $25 million company. And that should be achieved by May of 2027. The lifetime value of a customer could be north of $1.5 million. I'm pretty sure it will be. Our pricing right now is about $1,400 a tech. We're going to go to version 2 of VisorPRO by November 1st of 2024. Price will go up. And then by summertime of 2025, we'll be integrating into things like warranty and subscription revenue. Again, the pricing should increase over time. Now, from a standpoint of competitive analysis, CNH and what are they doing? Well, CNH is mirrored down in a whole bunch of CNH is mirrored down right now in a whole bunch of dealer issues. The dealers don't want the OEMs, the big OEMs, to dig their nails too deep into their business. Dropbox, Microsoft, Google, they can do some of this. However, Microsoft is very expensive, and we don't think that the solution is going to be tailored to what the equipment sector needs. CDK is an ERP system that is out there, and we want to integrate that so we can access the work orders. That's where we're going with this. Can we become the dealer portal of the blue collar sector? In other words, forestry, construction, aviation. I think we can, and that turns our projections into a $1 billion company, which is kind of exciting. Don't know why my cursor isn't moving properly, but anyways, we're going to integrate our business logic with ERP system. Do we have the team we need to do version 2.0 by November 1? Nope, we're going to need to hire some additional people. And then across the bottom here, I show our main expense driver assumptions. We got 15 people in the company right now, so our main driver of expenses about $1.7 million. We're looking at in fiscal 24, which is starting on June the 1st, to go from 15 people up to 18 people. We know where we want to add people. We want to add people in the area of product development and also sales and market sales primarily. And so we want to increase to 18, a slight increase in salary, bringing our cost to $2.2 million. And then we want to increase to 23 people, $2.93 million. And then ultimately by 2027, we want to get to the point where we're at 31 people in the company. And so that's kind of where we're shooting. That would be a $4 million cost driver. All right, on the revenue side. On the revenue side, what I've done here is I've taken and rolled revenue out, and you can see here the customers that we have on board. I've got to add some more here. Herget's just came on, and hopefully Ramsey Brothers will as well. But these are actual numbers. Torgeson's, for example, 160,000 paid us in January, and they'll pay us again in July. And so I roll that all the way forward into a fiscal 2024 projection. And I do that all the way down to 200 dealers. So we're going to go for 50 dealers till May 31st of 2025, and then 100 dealers. And then ultimately I show the rollout to 200 dealers by May 31st of 2027. So I hope that makes some sense to you. So you have the assumptions on the cost driver side, you have the assumptions on the dealer side. Again, this is shooting for just the dealers that are in the ag space, doesn't include construction or anything else. For our performance standpoint, this is what a performa looks like. The top part of the performa really reflects cash flow, and the bottom is an income statement reflecting EBITDA. So this helps you understand what I'm working with. Currently, we're very tight. I put in $175,000 of my own cash again into the company in April. We are looking at having to put in a little bit more in May. We're looking at driving sales, but we're running up against springtime right now with the dealers. So most of the dealers are dragging their feet a little bit because they're servicing the seeding season. However, we are putting in a campaign. It's called Catch the Train AI train campaign for May. So we are going to do our best to drive up sales. But really what I wanted to point out was what we're going to do. We're bringing $2.6 million into the company. That's the seed round investment. We've already got several of the people that have contributed in the seed round. So we have term sheets out there, and I'll show you this in the cap table. So with that $2.6 million, we're going to do everything that we said we're going to do. And assuming that we do that, we bring 50 dealers on, only 50 dealers, by May of next year, we'll have a $4.3 million in revenue, $3 million in cost, and about a 24 or 25% EBITDA. But as we ramp up towards 100 dealers, we turn ourselves into 72% EBITDA, and we turn ourselves into 78% EBITDA. This can be very, very lucrative. So if you were to invest $2 million US or 2.6 million Canadian, that investment in a very short period of time turns into 400 or 1,000% ROI on your investment. So that's kind of where we're at in terms of cost assumptions, revenue assumptions, and performa. And of course, I've included this spreadsheet so you can mess around with it. The important thing is to understand that if my estimations are off by 50%, you're still looking at a very, very lucrative company. And this is before we add in construction or forestry or anything like that. Now I want to take you into the cap table. This is the cap table. At the top here reflects me. This is my personal holdings inside the company, family trust, myself, and my management company. You can see here that we have a group of angel investors that are all 6 agricultural holding companies, and they invested about $250,000 each. And it takes you all the way down through the safe investor, friends and farmer. And then you can see here that anybody with true is in a voting trust with me. So friends and farmers, we have several farmers. We have our employees in an employee stock option program. And I've been around enough to know that setting up a voting trust is a real simple way for me to administer a lot of that. So that's all built into the performa. Now, as you get towards the bottom of the performa, you can see here that these are, I've invested $3.6 million of my own capital plus a $475,000 note. So from the time we founded the company, I put in 52% of the capital. With my founder's shares, I owned 64%, but actually I vote 78% with the voting trust. So There's a total of 11.3 million shares in the company. These are all common voting shares, except for the ones that are in a voting trust with me. So what we were prepared to do is we're prepared to bring in an offering of 1.9 million shares for sale. And those 1.9 million shares are common shares. That would raise the $2.6 million. That's 14% of the company. And so this shows everything you need to know about the pro forma. Everything's on here. It's very straight. At the end of the $2.6 million investment, I would still own 55% of the company. I'd vote 67%. With your investment, there would be considerations for a board seat. Our board is very clean. Myself, Greg Indruko, and Maurice Keane. So that's the story on the pro forma and the cap table. Those are really the two most important things, I think. There's no legal skeletons in the closet. We own our IP, we own our team, we own our trademarks. We're heavily invested in the technology that we have built up to this point in time. We have built and built and built, and now we're ready to scale. We're commercial. We started selling AGvisorPRO in January of 2024, and this is April. We've got about $600,000 worth of revenue, and now we're gearing up post-spring to bring on Case and AGCO dealers. That's what we're shooting towards. So anyways, that's an update from Rob. I hope you find this useful and allows you to better navigate the two spreadsheets that I've attached.